Welcome back, everyone. The purpose of this video is to take you through and help you understand how to find day trading opportunities using the Unusual Whales options flow. Now, before we get started, for those of you who don't know me, my name is Peter Tarr. You can find me on Twitter at PROFITSTAKEN, and I'll put that in the description as well. I am a former licensed options and derivatives specialist as well as a professional trader, and I became licensed in 2005. I've been trading for a very long time. I have a firm understanding of the markets, and this is what I love to do, explaining the markets, breaking them down, trading. I spend a good portion of my time also cautioning everyone as who not to follow. You have to be very careful about who you get your information from. But let's get started on this topic here. I'm excited to dig into this. So when we talk about identifying weekly options trades, well, I've gone through a little bit before. I've had a DTE video, which you can see the link to. I also have a premium video, which you really want to watch in conjunction with this to get a deeper understanding. But I want to narrow in on weekly options plays. So how is this video different and what are we talking about? Well, as you know, the name of the game is exposure. And one thing I've explained before is that when you're looking at premium sizes, they're going to be different depending on the company. And I'm going to give you a really quick example. So I'm going to go ahead here and type in $100,000, and we're going to look that up for Facebook. So of course we've got our ticker here, and we'll just type in FB. And let's see what the results are for today so far. We're at noon time, and this is February 23rd. And look what we have here on Facebook. It's quite a few moves, right? Okay, well, let's take a look and see what we would get if we pulled up Snapchat. It's a pretty big company, right? It is, but nowhere nearly as big as Facebook or, Meta. And why are we seeing the difference here? Well, it's the size and it's the options activity on those particular securities. The size of the company is a general guideline, but then you need to dig in. Some companies have far more speculation and far more options activity. Palantir is a good example. Some don't. So narrow in using the size of the company, and then you'll get your specifics based on the activity. But when it comes to premium sizes, what do we see going through the week? What is the one adjustment that I really want to talk about and focus on in this video? Well, while we do see some big moves happening today, the name of the game is exposure. So let's talk about exposure. That way you'll have an understanding of what I'm about to explain. When institutions make large purchases or moves with options, what are they trying to do? They're doing one of two things every single time. They're either increasing their exposure or decreasing their exposure. And decreasing their exposure can also be expressed as mitigating risk. So with that in mind, when we're talking about weekly options, what are we looking at? Well, most day traders and oftentimes swing traders are looking at purchasing weekly expirations, right? So these are weekly expirations. Why do we do that? Well, it's because you get the most value. You're going to have a lower entry price to get the same risk exposure. You want exposure to a potential move, but you want a lower entry price. You want your capital to be able to do more. Now, that's all else equal. Sometimes you'll push out to a later expiration date. I do that myself, and that's typically because of liquidity and because of value. But more often than not, if I'm planning a day trade, I'm looking at weekly options. So how does that pull back to what we see on Unusual Whales? Well, it's the same idea when we're looking at institutions, right? So we could see these big moves being made, but it's currently a Wednesday. If you look at a Friday, you'll see premiums decreasing intraday. If you look at a Thursday, you'll see lower premiums as well. How do we understand that concept? Let me dig a little bit deeper and explain it a different way. If you're purchasing a weekly and you're purchasing something that is out of the money, your extrinsic value is exposed. To those of you who don't know the lingo, don't worry about it. It's just financial terminology. It doesn't mean you're a better trader or a worse trader. Extrinsic just means it's the value that you have out of the money. So if I have a put, or let's say I have a call at 255, because most people like to purchase calls, right? And it's currently trading at $200 and I paid $60. Well, 55 of those dollars are in the money. $5 are out of the money, right? So by the end of the day, whatever you have that's out of the money, that premium will erode to zero because there's no more speculation. Your contract is worth what it is relative to the price. Institutions know this, and you're not going to hedge as much on a Friday, particularly out of the money, because there just isn't as much time for the move to be made. Like if you, let's say Facebook is trading at $255 right now, and you're speculating that it will move to $270. And so you buy your options contract, you're hedged, you're out of the money. You have from Monday to Friday for that to happen. Well, on Tuesday, you have less time, so you're not going to hedge as much. On Wednesday, your premiums are going to be even lower. On Thursday, they're going to be lower. And of course, Friday, intraday, theta, that's time decay, is in full effect. So your premiums are going to be even lower. So how does this change the way that you look for options when you're using unusual whales? Know this in advance when you're looking at the weekly expiration dates, right? So it is the 23rd today. These are the weeklies. When you're looking at options that are expiring on a weekly basis, notice that you'll need to adjust your filter on the premiums. That's relative to the stock. You'll need to adjust your premiums to take into account that they will be lower. That doesn't mean that institutions aren't convicted. They just have far more risk. So if I see, for example, a $600,000 premium on a Monday, that has about the same significance, and this is just very rough, as maybe a $100,000 premium purchased on a Thursday or a Friday morning. Why? Because on the Monday, you've got several days, and on the Thursday or Friday, time is winding down rapidly, so you're taking a much bigger risk. If you've ever purchased weekly expirations, you know, what do we call Fridays? We call them Lotto Fridays, highly volatile, risky Fridays. Why? Because your premium is going to erode. Prices move very quickly, your premium is lower. It's the same thing for institutions. So when you are charting out your potential plays using unusual whales, know that smaller sized premiums have a larger impact as we go deeper into the week. Tuesday versus Monday, Wednesday versus Tuesday, Thursday versus Friday. And as we get later, it's not applied evenly. The closer we get to Friday, the more magnified and exacerbated this is going to be. So when you're creating your watch lists, just keep that in mind. If you want a full picture of how to use this in conjunction with a total strategy, please take a look at my other video on premiums. That way you get a complete understanding of premiums and not just getting a slice of it. And of course, I have several other videos that help you navigate through unusual whales, find plays, understand expiration dates like I'm discussing here. It's not always that you're looking for a weekly when it comes to institutions. You might be buying a weekly. That's because your capital can't stretch as far as an institution's. Institutions have very different reasons, and I explained that in the DTE video. So take it holistically, but do understand that as we move through the week, you should be adjusting your perspective on premium spent. I hope that was really helpful. Please follow me on PROFITSTAKEN. That's on Twitter, sorry, at PROFITSTAKEN on Twitter. And of course, if you want a deeper, richer engagement with potential one-on-one coaching opportunities, that's PROFITSTAKEN.com. I hope you enjoyed this video. Leave any questions or comments below, and I will do my very best to get back to you ASAP.